Hey everyone, I know it says that I'm George, but I'm literally not George. I'm probably very different. I probably look different, and he's male and I'm female, so you guys get the point. So, welcome to our daily live. My name is Dr. Rashida, and I am the Chief Operating Officer of Beaver University. And I am a 15-year tax veteran, tax professional. So, I'm going to talk to you really quickly about the things that you should be doing to meet the extension deadline because we are well past our filing deadline, which was April 18th. And now I'm going to give you 5 short tips that you all should be doing to prepare for the next deadline. The number one thing that every business owner should be doing right now to prepare for the October 15th deadline is to set a strict deadline for yourselves on when you are actually going to file your tax returns. Now that extensions are in, understand clearly that that does not mean that you have avoided penalties. So you want to ensure that you set a strict deadline for yourself on when you are actually going to file your taxes. One of the things that you should not do is wait until October 14th because now we are going to create havoc and you're going to create a bigger mess for yourself. One thing that I want to point out is that if you have an S Corp and you did not file by March 15th, you have already incurred a penalty of $240 per a shareholder that is going to be due regardless of when you file because your deadline was not the same as our individual 1040 filers. Therefore, you are extremely late and you should be trying to get those tax returns in as soon as possible. So, number one, for all my business owners, please set a deadline for yourself because that deadline will encourage you to go ahead and prepare so that you can be ready for your 10/15 deadline. Now, the thing is, around Be Free, we encourage you to have all of your information in no later than October the 7th. So that gives us time to strategize with you and to further plan if there's other things that we find and opportunities that we find to make your tax liability a little more palatable. The goal is to minimize the tax liability, but to also put you in a place that you can do the task that you are setting out to do with your business. Now, I know people are used to deductions, credits, write-offs, and everything, but one of the things that I pride myself in with this firm is ensuring that we don't write off everything unnecessarily. Some people will put themselves in a position where they cannot obtain funding, cannot buy or make a large purchase, such as an asset like real estate, because they have written off everything and have shown their business to be not profitable. So the business is not actually making money on paper. That could be a problem. So you want to make sure that you talk to your tax professional and that they understand what it is that you are trying to accomplish for the next year. Every business owner, number 2, should have goals set for the next year. So before you go in to file your extension, you should already know where you need to be to put yourself in the right position for the next year. Good business owners have budgets and they have plans and they have goals for their business for the next year. And because I know that you all are great business owners, I know that you are absolutely going to have your plan ready so that when you sit down to file your extension, you are making the right decisions about your tax situation. The third thing that you should do is know your numbers. Do not, and I'm going to say this again, do not trust someone else to decide what your numbers should be for your business. It is very important that you, as a business owner, in order for you to scale and grow your business, you must know your numbers. There's another reason that is important. Tax fraud is real. And because it's real, you have many people, many preparers, strategists, attorneys, even CPAs, EAs that work to get you larger refunds and in turn harm your business. And in doing so, if you don't know your numbers, you do not know what they're inputting in your tax return. I've got a story. What good would taxes be without a story? Literally, I have a client who right now is in a negotiation for an appeal with the IRS because the preparer put in the tax return that they had made a donation of an asset that was worth $154,000. I had to pause because I wanted that to sink in. They trusted the person that completed their tax returns, and in doing so, in an attempt to make themselves look good and get this client a refund, they put in this tax return that my client, my now client, had made a donation of $154,000 of in an asset. And in doing so, there's an additional form that must be completed, but that tax preparer did not complete that form. So now the IRS is looking for that form to be completed to verify that this $154,000 donation was made. What is that going to do? It is going to cause a higher liability for the client, and it is also going to put them in a position where they are now on the radar of the IRS when they are filing their tax returns. So make sure that you individuals know your numbers. Number 4, you must know the rules. We at Be Free University are on the real estate path. We are talking about tax liens and deeds. We are talking about the importance of starting that investment process. I want to talk to you about the importance of knowing the rules. Now, when it comes to real estate, especially tax liens and deeds, there's a possibility that your tax lien property or your deed property is going to need rehab. There's a possibility that that is not an occupied building. There's a possibility that you are going to have to invest additional money to bring that property up to code. Good evening, Ashley. And in doing so, when you have to bring that property up to code, many people are under the misconception that they can write all of the rehab costs off on their tax returns in the current year that is happening. That is not how this works. So number 4 is you must know the rules. Those of you that are purchasing tax liens and deeds, one of the rules that will apply to you in this process is if you have to rehab that funds, that money cannot be written off until that property becomes income producing. That's just the general rule. It must be income producing in order for you to write off the amount of money that it cost you to rehab that particular property. So number 4 is you must know the rules. IRS has a unspoken list of red flags. There are things that people do on their tax returns that immediately cause them to be put into a category and set up for audits. And they can be mini audits or they can be full blown audits of your entire tax file. One of those red flags is investments. It is also section 179 where you hear people talking all the time about vehicles and writing off the 6,000-pound vehicle. Well, the rule is know the rules. The vehicle must weigh 6,000 pounds. And get this, you can't eyeball it. You can't walk onto a car lot and say, oh, that one looks like it weighs 6,000 pounds. Well, it's big and it's got big wheels. It must weigh 6,000 pounds. No, you must do your research. You must get the VIN number from that dealer and you must research and find out what features are on that vehicle to ensure that it meets the class weight. You've got to know the rules. So that is tip number 4. Number 5 is hire a bookkeeper. Simple as that. Business owners, you all are too busy. You're too busy. You're busy. Just like Mr. Howard and I, you are very busy. You do not have time to keep your numbers and stay on top of them. Therefore, you need a bookkeeper. If you have a business that's larger than, let's say, if you're in a 6-figure business and higher, you probably need a CPA. But if you are less than 6 figures right now in profit, you can work with a bookkeeper to establish your numbers. You need to do that. If you did not do that, for last year, for 2022, and you have an extension in the system, get the bookkeeper now and let them bring your books current so that when you come to file your extension and finish your tax return, we have the correct numbers to work with, and therefore you're able to better decide what your plan is going to be for next year. So all of my business owners, 5 tips for filing after the deadline. Number one is set a deadline for yourself and get those taxes filed ASAP. Do not wait to the last minute, because just because you filed an extension, does not negate penalties and interest. There are certain rules that have to be applied in order for you to avoid. It's just no, we're not avoiding it by filing an extension. What we're saying is, I need more time to clearly state what my position is as a business owner or as an individual if you filed an extension. Number two, you must know your numbers. Know your numbers. Know your numbers. Know your numbers. You've got to know your numbers. Number three, you've got to. That was number four. You got to know the rules. And then number five is you need to hire a professional, a bookkeeper. And one of the things that I missed out on telling you guys is review your extension, review that paperwork, review those files. You've got to know. And if you don't know, then ask somebody, because you can get yourselves in a lot of trouble. My number two rule, let me go back through them again. Number one was set a deadline for yourself, file your taxes and get it done immediately. If you were an S corp, you are way late and you've already incurred penalties. Number two, you want to make sure that you know your information. Do not trust someone else to just file the information for you. You need to know what is happening in your tax file. Number three, you need to avoid red flags at all costs. Number four, you need to know the rules of your filing. And number five, hire a bookkeeper. Make sure that you hire a professional to keep your numbers. We here at Be Free University, Be Free Tax, we need you to hire professionals to bring the numbers and make sure that the numbers are correct, because if not, you are treading water and you're in a dangerous place. You can do a lot, but you've got to have your numbers on paper. There's funding, there's purchasing assets, there's business credit. All of these things work together, and your tax minimization is part of your business building, and you cannot scale or grow without it. So part of your plan has to be to have your house in order. Make sure that you file your taxes, make sure that you do it correctly, and make sure that your business is showing the profit that you need for it to show so that you can go to the next level. This is Dr. Rashida. I've been here giving you guys some tax tips for filing after the filing deadline. Get that paperwork in and don't wait till the last minute. Put your tax professional in a position to strategize and help you to prepare and put yourself in the best position possible for the coming year. I pray that you scale, that you grow, and that you exit. Check us out at BeFreeUniversity.com. We'll be coming with our business courses soon, and there's a big announcement coming in your email. So watch for that email very shortly. Thank you all for being here, and don't forget, you can still get everything that you need to be successful in life and in business right here at Be Free University. We love you with the love of Christ. Take care, and we'll see you guys on tomorrow night. God bless.